Hi traders and welcome. This is JTrader. Today I'm going to be your mentor for who wants to learn to trade small caps. What are small caps? Stocks with less than 700 million market cap, and why they are so attractive. Because they can deliver a big return in terms of percentage in about a few hours or even in a few minutes. But remember that price action, the manipulation is quite different between a small cap and a large cap, something like Nvidia, Tesla, Amazon. So we'll learn about this later in our course. In the first part of our course, we're gonna cover the process of day trading. So everything that I do before starting to trade. So for example, how I select the stocks to trade, which app, which software I use for looking at the news, the data, the stats, which are very important when you trade small caps. And also which software or charting tool I use for my charts. Again, welcome everybody. I'm sure you will learn a lot. And if you have comments, reach out to JTrader. Process in day trading is very important because when we're talking about the process, it means everything that we do from getting to the station, selecting the trade, investigating the company, finding the stock to trade, taking the trade, risk management, managing the trade, and even after, how we review our trade. Remember that the examples that you will see right now are based on what we actually played in the room. Every day, as we said, we screen share showing really live trading, so you can trade with us. And we've been tracking these setups based on a playbook, right? So something that is repetitive with statistics since 2017. So here you see JTrader, for example. This is the app that we've built. And I like to track in the beginning of the day both, as you can see, mid caps, big caps, in this case, breakouts, large caps, and also over here, small caps. But today we're going to talk about only small caps because this is something that I would say you'll be so interested, especially for those traders that want to grow their account very fast. So imagine that you're buying a $2 stock or $1 stock, and a lot of these stocks will move like 200-300% in one day. So you can simply double or triple your money one day. Now, don't think this is easy. Remember, 90% of the traders that they trade, okay, they get into day trading, they fail. They fail for many reasons because they, for example, they may not have a good strategy. They didn't test or back test enough their strategy, or they miss knowledge in tape reading, maybe in order flow, or in risk management. Also, a big component you will see there will be like discipline. And these are things that you'll simply learn with time. And the first thing that I tell you is to dream, to simply visualize what you want to achieve and look to achieve it. Look to achieve this because it's something that simply can change your life. Now, about small caps. My process, the first thing when I get to the computer every morning, this is going to be 3:30 New York time. I'm lucky because I'm based in San Marino, Italy, the Republic of San Marino, so I can trade in totally different time frame and time zone. And over here, I get 3:30 New York time. So I start looking at my scanner, and in this scanner, this is essential because I'm filtering those stocks that morning they're showing volatility and liquidity. And what I mean by that, in order to make money, you simply don't need to know if the stock is going up or down, but you need to see volatility, so range. Imagine if a stock all day is like moving between $1 and $1.10, 10 cents. That's not gonna make you rich. That's not gonna give you opportunities to trade. But imagine that a stock is going from example 1 to 3. So based on the parameters that we're selecting right now that I'm showing you, you will see that the stocks that we're focusing every morning are called momentum stocks, stock with high volatility. So this is a scanner, and over here you can see that I press filters, and I start selecting which stocks I'm interested in. So stocks between 0.1 and $15. volume. At least we want to see a volume of something with a little bit of volatility, right? So we're going to put 50,000, okay? So we want to see a volume of at least 50,000. Change, we want to see something about more than 20% gapper versus the previous close, and market cap below 700 millions. I can add more filters over here. For example, the relative volume. I can put the float. I can filter for short flow percentages. All these are things that we're going to talk later. We're going to select stocks for long or short. And then I simply run over here, apply. And this is the first screen that I look every single morning. And you can see this, for example, today is Sunday, this is for Friday. So I start looking over here, all these stocks were gapping up on Friday that had a gap at least 20. And then they had that parameter of at least 50K of volume already traded pre-market. Now, in order to trade small caps, you need three things. The first thing is a robust strategy. So something solid that you've tested over years, and something that is tracked with statistics. So you know that over time, this setup will work. Then you need, of course, risk management, because no strategy will be perfect. So there will be strategies that work 40% of the time, others that will work 70, 75% of the time. But imagine that you can even have a 90% winning rate, but one trade can simply swipe out all your profits of maybe all your gains of the last year or even all your account. So risk management is very important. And the third thing is you have to be very disciplined. Discipline is something that even if you were not born with, because nobody is born with, you have to grow through your life. In my case, doing Taekwondo for years, lifting weights, this really helped me to build my discipline and build, I would say, my mental state. And I'm able to be firm when a position, for example, I need to stop it, so I simply will quit, or simply hold when a position is winning and I need to hold to my target. So you'll see that this is something more advanced, but definitely is going to be a good part of your trading. Hey, this is Jay. I'm taking a quick moment today to explain you on how to set up your elite trading account with Zimtra. This isn't a simple account, but I've put together the best trading advantages for day traders. First of all, up to 20 buying power, up to $1,000 in starting credits, and also free ECN routes. I've also put together some exclusive perks like 3 months of mentorship included directly with me, 50% off of private education, and also free access to small cap room once you exceed 2 million in volume traded. Well, click the link in the description and set up your trading account. Back to the process. First thing is having a scanner, selecting those stocks with at least 20% gap in the morning. And then when I look at the stock, for example, I'm looking over here at Veru, I need to look at three more things. The first thing, remember, is the most important, why the stock is up. And over here I go down and I see the news. You can see several news for the 6th, so that was Friday of June. Because if a stock, remember, has no news, means this could be just simply a pump and dump and a newsletter. We'll talk about pump and dump, but generally, remember this term means like it pumps, so it goes up, and then will simply flush all the way down. When there is a news, then things change because we have to measure the importance of that news. Could be a news, for example, with a very good catalyst, let's say a phase 3 primary endpoint met or FDA approval, which is a strong news. Otherwise, we'll see some fluff news or like recycle. Maybe this is a news that already came a few days ago, a few weeks ago. They're simple like recycling in other terms. For example, a collaboration or a contract agreement. So we have to evaluate the news. So I spend my time after I have my scanner to look at the news and I start reading the news. I don't spend too much time because there are parameters more important, but I just want to see what news is guiding the stock that morning. If this news will also attract traders, it will attract retailers. Then the second thing, I start looking at the stats of the stock. So what stock is this? Vero. Okay, let's do a little bit of analysis of this. I start looking if this stock is about, for example, electric vehicles or biotech company, or let's say computers. And I started researching how big is their market cap. The market cap, for example, is around 4 million. We have a float of 3 million. Remember, float is the amount of shares you can buy in stock market. And then I start looking at the institutional ownership. So the higher this number, the bigger the institutional owned company. So imagine, let's say it could be institutional, hedge funds, firms that are like interested in having this company in their portfolio. Okay, so you will see this number pretty high. Generally, I put like a 30%, 35%. So above 30, 35%, I consider this like a big presence of institutional. And below instead, 30, 25%, I consider this like a low institutional. We can say, like in simple terms, that generally a stock with high institutional, they will tend to push it higher because firms, hedge funds, they will have more impact on the manipulation of the stock, so they will try to push it higher. And instead, stock with a very low institutional, they tend more to fail. This is something also that I track with statistics since 2017. Also, we look at insider in ownership. It's not that important for now. And I will also look at a short percentage of float. So how much of the float is held short? The higher this number, remember GME, for example, even if this was not a small cap or AMC or others, when they had the short flow 30, 40, 50%, so it means that 50% of their flow was held by short sellers, then the stock with the news, with volume today, with a catalyst, is more prone for a squeeze. So what we'll do that day, we'll simply stay away from shorting and waiting the right opportunity to long. And this is the reason why this course of today is teaching you what you will never hear from a beginner course, from something that a trader tells you the first day, but right in the first day you can bring into your trading. It took me years to put all this and make a strategy, make a playbook for me and the traders that I'm coaching. The third part, so remember, the first part is looking at the news, second part is looking at the stats, third part is looking over here at the history of the stock. And what does it mean? We always talk about forecast. And a forecast is essentially a forecast, so like we try to determine if a stock will go long or the stock will go short. So if the stock will rise or fade. There is a little bit more to talk about forecast, and this will take me probably like 2 hours only for this, and it's something that I teach to traders in that I follow, that I coach. But essentially, this is a very good tool because over here we can see that for stocks, and look at my filters, in the last 5 years, where we have a gap above, we can say 20%, simply like our gap scanner, with at least 1 million volume traded on that day. So we want to see some liquidity. I want to see how many times this stock faded on day one or it ran on day one. And we can see over here that we had 3 gaps in the last 5 years. One closed above the open, so essentially a closed green on the day. 2 closed over here, red on the day. It's very also important to determine that when was the high of the day by average time. So did they have, for example, an extension midday till the high of day like in the afternoon? Or they simply had the high of day at the open. And this happened by average at 9:35. So right away in your mind, you have to picture the stock that had simply a gap. It pushed to the high of day in the first 5 to 10 minutes, and then it faded. So it makes you really understand that if the high of day was in the first 5 minutes, then we cannot really expect a big long play. But of course, this is always based on the history. And sometimes history doesn't repeat. That's the reason why there are more things to learn, but this is the forecast. So this really tells us the behavior of the stock. And then I'm looking at the low of the day. So when the stock had the minimum of the day, around 2:30 p.m., and it faded over here for about 34% average. And it ran for about 17% by average. Then also you can look at stats day 2. If I press over here, stats, I'm gonna check also how was the price action that day. So we can see, for example, 2022, 21st of December, this was a big gapper. So we went from 4 to 8, and you can see that at the open, we had this push to the high of day, and then it faded. So this tells us that it pushed in the first 5 minutes, then it faded. 2024, this was February. We can see the stock ran pre-market, and then over here, the gate, it pushed again. So it likes to push, it likes to give that first impulse, and then it faded. This over here was the actual day. So this was the Friday of June 2024. You can see we had a big pre-market push over here, and then at the gate had a small pop and faded all the way down. So if now, let's say Vero, in the next 2, 3 months, 4 months, will give us another gap with almost the same parameters of volume, of daily support, daily resistance, we can expect a behavior like this. So we can think now that Vero, in the last 3 times, for the last 5 years, had 3 gaps. These gaps had a behavior of pushing at the gate and then fading. So my idea is going to be, when I see something like Vero, to trade in the same way. So not really to long it, to buy it for the long side, but to look to short. So we're going to talk about short when we're looking at strategies, but this is the first process for day trading, how I find stocks to trade. And scanner is the first thing, so try to look for stocks above 20%. Then we have our news, so we have to read the news, what's happening, why the stock is moving. Then we're looking again at the stats, and we'll understand more about the float, more about the micro float, the high institutional, the short percentage of float. And then I'm looking over here at the statistics, so the history of the stock, how it behaved. And this is all my process for day trading. This is all how I find stock to trade. And in this case, we cover scanner, news, and data. Now I want to look over with you traders at daily charts. This is a daily chart on Vero. We don't really need any indicator. Often you will see that I have J-lines or 200 EMA, which is mostly like the institutional EMA. Remember always that big hands, institutional firms, they look for the golden cross, which is a 50 and a 200 SMA, simple moving average cross. I prefer the exponential moving average. It's a little bit smoother. But when I'm looking at daily chart, when I'm looking to trade small caps, I only have my daily chart, and then I put the volume. So I go indicators. This is using trading view through as you trade. I start putting over here volume, simply select volume over here. Now we'll put volume. We can change over here the colors if you want. I like to put it gray. The growing over here, they really care about, the difference of the color. And then I'm going to put this indicator in the panel below. So a new panel below, all right? So over here, we can see that we had in all this zone over here, this is 2021, almost no volume. But in the zone down here, so we're talking about the last 2024 and something over here, 2023, we had volume. What does it mean? So it means that those days, there was some kind of news, some kind of catalyst that moved the stock, that attracted traders, retailers, institutional firms, and they were actually looking to trade this. So let's look, for example, this day. And remember that 21st December. So if we go back in the video, you will see that this was the day of the catalyst when we had this extension half day, and this is simply faded. 21st December 2022. And what I will do, I will start tracing my levels, because this is an important day where we track over here, for example, where we trade over here volume. We trade around 5.7 million volume. So I'll go over here where I see my lines. I can put a rectangle if I want. I can put simply an horizontal line, and I will put this line of resistance at the high of the day. I will put over here another line, over here the low of the day. So I know that during this day over here, we traded some volume. Then I'm interested in also in this other pop over here, because you can see that this pop, okay, so the 6th of February, the price got almost to the 50% of this range. So in the day where we traded volume, this one, right? When we had a push weeks later to this mid-range, we had the stock fading. What does it mean? It means that in this case, we had bag holders dumping. So imagine that on this day, we had traders, retailers, also we can say maybe some firms, they were like purchasing the stock. And they were purchasing the stock on the breakout, for example, of this level. So around 6:30, you can see daily breakout. Traders will get into daily breakouts. They will probably get over here at the gate, at the open. They're going to buy this around 740, 750. So they will start to think the stock, because it has a catalyst, will go all the way up. Probably will look for this daily resistance, $12. Price never got there. As soon as the open came, it fell all the way down. So remember the previous history chart we checked. And then at the end of the day, they're holding this. When they pay the stock at 6:30 or even 7:40 or even 8, they find themselves over here being bag holders, because now the price is around $4.50. So if you bought this, let's say around $8, and now the price is around $4, you lost 50%. But still, who bought over here $6 over here lost something like 25, 30%. And now you're thinking, okay, I hope the stock will go back up. So when weeks later, you see the stock over here going back to almost the daily resistance at 624, because this level, you can see that over here we bounced, we rejected, we bounced. So that level of 620, 630, it's important. I'm thinking, okay, I bought at 8. But over here, it's better to sell it at 6 than being over here down at 4. So I'm cutting my losses. And I don't want to hold this for the long term, because I don't believe anymore in the catalyst or in this company. And this is generally the behavior of 75 to 80% of the small caps that you will look to trade. And in this case, we have this dump. Weeks later, we can see another push over here. So we see that at the low of the bar of the catalyst day, of the news day, we have more sellers. So for example, who bought, let's say, at $6, $7, $8, and was not able to sell over here because maybe that day they believe this will go still higher. Now months pass, and let's say they bought at 8, now the price over here is around $3, and they're saying, wow, we're losing more than 50%. Maybe that was the money for me to go on holiday with my family. And now you see, all right, this morning the price over here is around $4.70, $4.80. I'm having less than 50% loss. Over here, I was having like 75, 70% loss. Okay, let me cut over here the position. And you start dumping as soon as you see a new news, as soon as you see a little bit of breakout, as soon as you see like a little bit of volume. But instead, for those traders that were not able to sell over here, they're still holding this these days over here. And now this is serious, because you're losing 70, 80, 90% of your position, of your, I would say, investment in this case, because it's a long term. So those days, we know that we'll have bag holders. Now, if the float in this case is around, let's say, 4 million or 5 million, and that day we traded 10 million, doesn't mean that we have 10 million bag holders. With a very low percent of short float, so imagine that there's no short sellers holding this short, and the float is 5 million. We have bag holders for maximum 4.5 or 5 million, considering if everybody is long, all right? So there are some bag holders, but if that day we had 50 million volume traded, doesn't mean that, oh, we had 50 million volume of bag holders. No, we know that those are key important levels where probably traders will start like selling their position. And you can see now where we'll trace other levels of resistance this day over here. And you can see that this top, again, it's a push and then fade on the news day. It's also the low over here, low over here. So you will see that I'm looking always of those points of confluence where, for example, there are more intersections. So bounced, price rejected, price rejected. So I believe that the next times the price will go into this area, it will simply possible to reject. And then I will put also this level over here. I will put, because it's a new gap day, I will put the low over here because this is the low of this bar of the volume day. And I will put also the low over here. Now, what's missing over here? You take into consideration the daily chart, and daily chart is very important, but you don't have to underestimate the intraday chart. So whenever you're looking to trade small caps, remember that you have also to shift your chart to a 4 hours or to a 1 hour chart, because only intraday charts will take into consideration the pre-market and also the after hours. Now let's take away some of these pre-market and after hours, so the gray lighted zones, and we can see now the price section on the hourly chart. This is our first day, remember, the 21st of December. So we put the high, we put over here this resistance because also the price rejected over here, we put the low. And then the price, as you can see, went back over here in mid of May and had the rejection from this previous low of the high volume day. And then also we can see that we have these lows, right? So this is just a technical resistance. Even if it didn't have any news, any volume, still the price over here like bounced one time, 2 times, and then it rejected. So when the price came below, start rejecting. So these days over here, the last 2 gap days, the price broke but then rejected. The price over here broke and then rejected, or actually touched and then rejected. So this level, 220, 230, 240, this area is a key area in our stock where next time we will have definitely sellers. And remember also one thing, the behavior of the stock, if now we go back, for example, to the daily chart, is to fail. Look, the stock, this is simply fading, right? So we don't expect this stock to go higher because it made a high, lower high, lower high, lower high, lower high. So all these zones now are key areas or areas of supply. So where we'll have sellers joining the trade. Trader, this is the first part of our course. Hope you enjoyed. If you have any questions, reach out to JTrader. And also, good luck for your trading, waiting you on a par course too.